Hello, friends. Today, we're diving into one of the most fascinating financial stories of all time: how the US dollar became the world's most powerful currency. From gold and silver to paper money, from the British pound to the petrodollar, the journey of the dollar is filled with wars, secret deals, and economic power plays. And most importantly, will the dollar stay on top, or is a new global currency ready to take its place? Let's break it all down, step by step. Here's what we'll cover in this video. 1. The rise of paper money. How we moved from gold and silver to paper currencies. 2. The British pound era. How the pound ruled global trade before the dollar. 3. The birth of the US dollar. How America's economic power made the dollar stronger. 4. World War II and Bretton Woods. The moment that changed global finance forever. 5. The Nixon Shock. Why the US abandoned the gold standard and what happened next. 6. The Petrodollar deal, the secret oil agreement that locked the world into using dollars. 7. US military and Wall Street influence, the hidden forces that keep the dollar strong. 8. The dollar crisis, inflation, debt, and financial crashes threatening its stability. 9. Global trade in the dollar, why countries still depend on the US currency. China and BRICS challenge. Can the dollar be replaced by another currency? 1. The rise of digital currencies. Can Bitcoin or stablecoins take over? 1. The future of the dollar. Will it remain the king of global finance? This is a story of power, economics, and global dominance. So make sure you watch till the end to understand how money really works. If you love deep financial insights, hit that like button, share this video with your friends, and subscribe for more powerful content. Let's get started. 1. The rise of paper money. How currencies gained power. Imagine a world where every transaction required carrying gold or silver. Sounds inconvenient, right? That's exactly how trade worked for centuries, until paper money changed everything. But how did we go from gold and silver to the colorful banknotes we use today? And why did some currencies survive while others faded into history? Let's break it down. Gold and silver, the original money. For most of human history, gold and silver were the backbone of trade. These metals had real value because they were rare, durable, and universally accepted. Whether it was ancient Rome, medieval China, or the Ottoman Empire, economies thrived on the exchange of gold and silver coins. But there was a problem. It wasn't practical. Carrying bags of gold was risky, heavy, and inefficient. Imagine traveling for trade and worrying about bandits stealing your fortune. People needed a safer and more convenient way to store and transfer wealth. The first paper money, a game changer. China was the first to introduce paper money during the Tang Dynasty, 7th century AD. But it wasn't until the Song Dynasty, 11th century, that paper currency became widely used. Merchants and traders started using government-issued notes that could be exchanged for real gold or silver. The idea was simple. Instead of carrying gold, people carried a note that represented it. The Chinese government backed this system, ensuring that the notes could be redeemed for precious metals whenever needed. This was revolutionary. However, paper money also had risks. If too many notes were printed without enough gold to back them, their value dropped. This is exactly what happened in China, leading to hyperinflation. Eventually, people lost trust in paper money, and it disappeared for centuries. Europe adopts paper money, the start of modern banking. While China had experimented with paper currency, Europe was still using gold and silver coins. But by the 17th century, European traders and banks saw the potential of paper money. In Sweden, 1661, the first official banknotes were issued. In Britain, goldsmiths started issuing paper receipts in exchange for gold deposits. These receipts could be used for transactions, just like money. Eventually, banks took over this system, issuing paper money that was backed by their gold reserves. This was a turning point. Paper money made transactions faster and economies more efficient. But the real power shift happened when governments started issuing their own official banknotes, backed by trust in the economy rather than just gold. Why some currencies became powerful while others vanished. Not all paper currencies survived. Some thrived and became global standards, while others collapsed due to bad policies, war, or economic mismanagement. Here's why. 1. Trust and stability. A currency is only valuable if people trust it. If a government prints too much money or fails to back it with real assets, inflation destroys its value. This happened in Germany in the 1920s when hyperinflation made their paper money worthless. 2. Economic strength. The most powerful currencies belong to the strongest economies. That's why the British pound dominated the 19th century and why the US dollar rules today. 3. Global trade and military power. Nations with strong economies and military influence can enforce their currency's usage worldwide. The British Empire spread the pound across its colonies, and later the US did the same with the dollar. The rise of fiat money. No more gold backing. By the 20th century, most countries abandoned the gold standard and started using fiat money, currency that has value simply because governments say it does. It's not backed by gold, but by economic trust and stability. This shift allowed governments to print more money to fuel economic growth. But it also came with risks. Too much money printing leads to inflation, which can weaken a currency's value. Why this matters today. Paper money transformed the world, making economies more efficient, trade easier, and financial systems more advanced. But history teaches us a valuable lesson. A currency is only as strong as the trust behind it. As we move towards digital payments and cryptocurrencies, we're witnessing another major shift. Just like gold gave way to paper, will paper money soon give way to digital currencies? That's a question we'll explore in the lessons ahead. For now, one thing is clear. Currencies that maintain trust, economic strength, and global influence will always have the most power. Lesson 2. The British Pound Era, the world's first global currency. Before the US dollar became the world's dominant currency, there was another ruler in the financial world, the British pound sterling. For over 2 centuries, the British pound was the backbone of global trade, controlling economies across continents. But how did it gain so much power? And why did it eventually fall, making way for new financial giants like the US dollar? Let's break it all down. How the British Empire controlled global trade with the pound. To understand why the British pound became the world's first global currency, we need to go back to the 18th and 19th centuries, the height of the British Empire. Britain wasn't just a country, it was a superpower, controlling nearly a quarter of the world's land and population. And what drives an empire? Trade and finance. 1. The British Empire's massive reach. The British controlled India, Africa, Australia, Canada, parts of Asia, and the Caribbean. These weren't just colonies, they were key economic hubs producing everything from spices and cotton to gold and tea. And guess what currency they were forced to use? The British pound. This wasn't just convenience, it was strategic. By making the pound the standard currency across its empire, Britain ensured all major trade routes flowed through London. Foreign nations needed pounds to do business with the empire. Britain could control the global economy simply by controlling the pound. It was a financial monopoly unlike anything seen before. 2. The gold standard, giving the pound unmatched strength. The real game changer came in 1816, when Britain adopted the gold standard, meaning every pound in circulation was backed by real gold reserves. This gave the world confidence in the pound's value because it wasn't just paper money. It had real worth. As a result, international businesses, banks, and governments started holding pounds as their reserve currency, just like they do with the US dollar today. By the late 19th century, over 60% of global trade was settled in British pounds. Whether you were in India buying spices, in Africa trading gold, or in China importing goods, the pound was your key to business. The fall of the British pound and the rise of new financial powers. Nothing lasts forever, and despite its dominance, the pound couldn't hold on to its throne. Here's why it fell. 1. World War I, the beginning of the end. The first major hit came during World War I, 1914 to 1918. War is expensive, and Britain borrowed heavily from the US to finance its military efforts. The problem? Britain spent far more than it could afford, draining its gold reserves. By the end of the war, Britain was in massive debt, and confidence in the pound started to crack. 2. World War II, the final blow. While the pound managed to survive after World War I, World War II, 1939 to 1945, was the knockout punch. Britain again spent beyond its means, borrowing billions from the US. This time, the damage was permanent. The world started looking for a more stable financial leader, and guess who was waiting? The United States. 3. The rise of the US dollar, a new financial superpower. After World War II, the world needed a new economic system, and in 1944, the Bretton Woods Agreement officially replaced the pound with the US dollar as the world's primary reserve currency. Here's why the dollar took over. The US had the largest gold reserves after the war. The American economy was booming while Britain was struggling. The US had massive global influence, both financially and militarily. Slowly but surely, central banks around the world stopped holding pounds and started stockpiling US dollars instead. By the 1970s, the British pound was no longer the king of global trade. The dollar had officially taken its place. The story of the British pound teaches us a powerful lesson. A currency's strength isn't just about money. It's about trust, economic stability, and global influence. Today, the US dollar is in the same position. It controls global trade, oil prices, and financial markets. But will it last forever? Or will another currency, like the Chinese yuan or digital currencies, take its place? 3. The birth of the US dollar, America's economic expansion. For most of history, financial power belonged to Europe. The British pound dominated global trade, and America was just another developing nation. But things changed, fast. The United States went from being a young country to the world's biggest economic powerhouse. And at the heart of this transformation, the rise of the US dollar. How did this happen? Why did the dollar become the most trusted currency in the world? And what role did the gold standard play in shaping the global financial system? Let's break it all down. How the US economy grew into a financial powerhouse. 1. From colony to economic giant. In the 18th century, America was a British colony. It had resources, cotton, tobacco, timber, but no financial independence. British banks controlled trade, and the economy relied on foreign currencies like the British pound and Spanish silver dollars. That changed in 1776, when the US declared independence. The country was free, but financially weak. So in 1792, the US government introduced its own official currency, the US dollar. It was modeled after the Spanish dollar, which was widely used in trade. At first, the US economy was small, but something was about to change everything. The Industrial Revolution. 2. The Industrial Boom. The US surges ahead. By the late 1800s, America was exploding with new industries, railroads, steel, oil, and manufacturing. While Europe was caught in wars and political struggles, the US focused on business. Railroads connected cities, making trade faster. Factories produced goods on a massive scale. The discovery of oil made America an energy superpower. By the early 1900s, the US was no longer just another country. It was a global economic powerhouse, challenging Britain's dominance. And as the economy grew, so did the demand for the US dollar. The introduction of the gold standard and its impact on global trade. 1. The gold standard. What it meant for the dollar. In 1900, the US officially adopted the gold standard, meaning every US dollar was backed by real gold. This was a game changer because it created trust in the currency. People knew that every paper dollar they held could be exchanged for actual gold. This stability made the US dollar one of the safest currencies in the world, and foreign nations started using it for trade. 2. World War I, the turning point. When World War I broke out in 1914, Europe's economy collapsed. Britain, France, and Germany spent everything on war, printing more money than they could back with gold. This led to inflation, weakening their currencies. Meanwhile, the US stayed out of the war at first and became a supplier of weapons, food, and materials. Gold poured into American banks as countries paid in gold for US goods. By the end of the war, the US had the world's largest gold reserves. This was the first step toward the dollar's dominance. 3. Great Depression and the Gold Standard Crisis. In the 1930s, the US faced the Great Depression, the worst economic collapse in its history. Banks were failing, People were losing jobs, and there wasn't enough money in circulation. To fix this, President Franklin D. Roosevelt, FDR, made a shocking decision in 1933. He abandoned the gold standard for U.S. citizens. People could no longer exchange dollars for gold. This allowed the government to print more money, boosting the economy. However, for international trade, the U.S. still backed the dollar with gold, for now. The U.S. dollar becomes the global standard. 1. World War II. The dollar takes over. By 1944, the world was in ruins after World War II. Europe's economies were destroyed, and countries needed a new financial system. So, 44 nations met at the Bretton Woods Conference and made a historic decision. The U.S. dollar would become the world's reserve currency. Why? Because the U.S. had the strongest economy. It had the most gold. It was the most stable country after the war. Under this system, countries pegged their currencies to the U.S. dollar, and the U.S. promised to back every dollar with gold. This made the dollar as good as gold in the eyes of the world. 2. The fall of the gold standard, the dollar's new power. By the 1970s, something changed. The U.S. was spending billions on the Vietnam War and social programs. The government printed more money, but there wasn't enough gold to back it. So in 1971, President Richard Nixon made a shocking move. He ended the gold standard completely. From that point on, the U.S. dollar was backed by trust, not gold. This was a risky move, but it worked. The dollar remained the most powerful currency in the world because the U.S. had the largest economy. Oil and global trade were priced in dollars. The world trusted the stability of the American system. The gold standard helped the dollar gain credibility, but what really made it dominant was America's economic power and global reach. Even after the gold standard ended, the dollar remained the world's currency because no other country had the same financial and military strength. But here's the question: will the dollar's dominance last forever? Or will another currency like China's yuan or digital currencies take its place? Lesson 4. World War II and the Bretton Woods Agreement. The dollar's turning point. World War II wasn't just the deadliest conflict in human history. It also reshaped the global economy forever. By the time the war ended in 1945, much of the world was in ruins, and economies were collapsing. Countries needed a new financial system, one that could rebuild economies and restore stability. And that's when the Bretton Woods Agreement changed everything. This deal didn't just create a new economic order, it officially made the U.S. dollar the most powerful currency in the world. But why did the world turn to the dollar? And how did a secret meeting in a small American town set the foundation for modern global finance? Let's break it all down. Why the world needed a new financial system after the war. 1. The devastation of World War II. By the time World War II ended in 1945, the global economy was a disaster. Europe was in ruins. Cities were bombed, industries were destroyed, and governments were drowning in debt. Germany, Japan, and Italy had lost the war and faced complete economic collapse. Britain and France, once global financial superpowers, were now heavily in debt to the United States. The global gold supply was concentrated in one place, America. In short, the world was broke. And the biggest problem? There was no stable financial system left. Before the war, countries traded using the gold standard, where money was backed by gold. But by the end of the war, most countries had spent all their gold on war efforts. This meant their currencies had no backing, inflation was skyrocketing, and trade between nations was falling apart. The world needed a new system, one that could bring stability, trust, and economic recovery. 2. The U.S. was the only country still standing. While Europe and Asia were struggling, the United States had become an economic giant. Unlike other countries, the U.S. didn't suffer war damage on its homeland. It had the world's largest gold reserves, holding over 70% of the world's gold supply. The American economy was booming, supplying food, weapons, and raw materials to its allies. The U.S. dollar was already one of the most stable currencies in the world. It was clear the U.S. was the only country strong enough to lead the global economy. And in 1944, world leaders met to make it official. How the Bretton Woods Agreement made the US dollar the world's reserve currency. 1. The secret meeting that changed global finance. In July 1944, while World War II was still going on, 730 delegates from 44 countries gathered at a small hotel in Bretton Woods, New Hampshire, USA. Their mission? To create a new global financial system that would prevent future economic disasters and stabilize world trade. After weeks of debate, they reached a historic agreement, the Bretton Woods Agreement. And this deal made the US dollar the world's most important currency. 2. The rules of the Bretton Woods system. The Bretton Woods system created a new global financial order with three main rules. The US dollar would be the world's anchor currency. Instead of gold, other countries would now peg their currencies to the US dollar. This meant their money's value would be directly linked to the dollar. The US promised to back every dollar with gold. Any country that held dollars could exchange them for gold at a fixed rate of $35 per ounce. This gave nations confidence that dollars were as good as gold. The creation of the IMF and World Bank. These institutions were set up to help struggling economies and prevent financial crises. In simple terms, the world was now running on a dollar-based financial system. 3. Why did the world accept the dollar as the new global currency? At first, many countries weren't happy about giving so much financial power to the US. But in reality, they had no choice. The British pound was no longer strong enough to be the world's reserve currency. The US had the most stable economy and the largest gold reserves. After the war, countries needed financial support, and the US was the biggest lender. This made the dollar the most trusted currency in the world. If a country wanted to trade, borrow money, or do business internationally, they needed US dollars. The impact of the Bretton Woods Agreement. This agreement had huge consequences for the global economy and shaped the world we live in today. 1. The US became the world's financial superpower. With the dollar now at the center of the global economy, the US gained massive financial influence. Countries started holding dollars as their foreign reserves. The US Federal Reserve controlled global money supply. International trade was now dependent on US economic policies. This wasn't just about money, it was about power. The US now had a financial weapon that could influence economies worldwide. 2. Global trade became easier and more stable. Before Bretton Woods, currency values fluctuated wildly, making international trade risky. With the new system, currencies were fixed to the dollar, creating stability and predictability. This helped rebuild economies after the war and led to a boom in global trade. 3. The beginning of the US dollar's dominance. For the first time in history, the world had one main currency for international trade, the US dollar. The dollar was now the most trusted currency, used for international trade, oil and commodity pricing, foreign exchange reserves, and this dominance continues even today. 5. The Nixon Shock, when the dollar left the gold standard. For decades, the US dollar was as good as gold. Thanks to the Bretton Woods Agreement, every dollar in circulation was backed by a fixed amount of gold. This meant that if a country wanted, they could exchange their US dollars for gold at a fixed rate of $35 per ounce. This system created trust and stability in the global economy. Countries held dollars with confidence, knowing they could always trade them for gold. But in 1971, everything changed. President Richard Nixon did something no one expected. He took the dollar off the gold standard. This decision, known as the Nixon Shock, completely changed the global financial system and set the stage for the modern economy we live in today. Why did Nixon make this decision? And what happened when the world's most powerful currency was no longer backed by gold? Let's break it all down. Why President Nixon abandoned the gold standard in 1971. The Bretton Woods system worked well for a while, but by the late 1960s, the cracks started to show. 1. The US was printing more money than it had gold. The biggest problem? The US government was spending way more money than it actually had in gold reserves. The Vietnam War was costing billions of dollars. Social programs like Medicare and welfare were expanding. The U.S. was importing more than it was exporting, leading to huge trade deficits. To cover these costs, the U.S. printed more dollars, but under the gold standard, every dollar needed to be backed by gold. The more money the U.S. printed without adding more gold, the weaker the dollar became. Foreign countries saw this problem and started to lose trust in the U.S. dollar. Other countries demanded gold instead of dollars. For years, the world accepted U.S. dollars because they knew they could exchange them for gold. But as confidence in the dollar started to fall, countries like France and Germany began demanding gold instead of dollars. In 1971, France sent a warship to New York to collect its gold reserves from the U.S. Other countries followed, exchanging their dollars for gold at an alarming rate. The U.S. gold reserves were shrinking fast, and the government was running out of gold to back the dollar. If this continued, the U.S. would run out of gold completely, and the entire financial system would collapse. 3. Nixon's secret decision. With the U.S. losing gold at a rapid pace and confidence in the dollar crumbling, Nixon and his advisors held a secret meeting in August 1971. They had two choices: stick to the gold standard and risk a financial collapse, break the system and remove the dollar from gold. Nixon chose the second option. How this decision changed the global financial system forever. 1. The Nixon Shock, the day the dollar lost its gold backing. On August 15, 1971, Nixon appeared on live television and made a shocking announcement. The U.S. would no longer exchange dollars for gold. The gold standard was officially over. The dollar would now become a fiat currency, backed only by trust, not by gold. This decision shook the financial world. Countries could no longer exchange their dollars for gold. The value of the dollar was no longer fixed. It could now rise and fall based on market forces. The global economy shifted from a gold-backed system to a floating exchange rate system. This was the birth of modern money. 2. The immediate impact, a financial shockwave. The Nixon shock caused huge consequences worldwide. The value of the U.S. dollar started dropping as people lost faith in its stability. Inflation skyrocketed. Without gold to limit how much money could be printed, the U.S. started printing more dollars, making prices go up. Countries had to adjust. Currencies were no longer tied to a fixed rate, leading to unpredictable exchange rates and financial uncertainty. Many world leaders criticized Nixon's decision, calling it a reckless move. But the U.S. had now changed the rules of the global economy forever. 3. The long-term effects. The rise of the U.S. dollar as a pure fiat currency. At first, many thought Nixon's decision would weaken the U.S. dollar. But over time, something unexpected happened. The U.S. dollar became even more powerful. The world continued using dollars for trade, oil, and finance. Instead of gold, the dollar's strength came from the U.S. economy and government policies. This was the start of the modern financial system, where money isn't backed by gold, but by trust in governments and central banks. Lesson 6. The petrodollar system, how oil strengthened the dollar. By the 1970s, the U.S. dollar was no longer backed by gold. After the Nixon shock of 1971, the world's financial system was in chaos. Countries didn't know what to trust anymore. If the dollar wasn't tied to gold, why should anyone keep using it? The U.S. needed a new way to secure the dollar's dominance. And that's when they made a secret deal with Saudi Arabia, a deal that would reshape global finance and keep the dollar as the most powerful currency in the world. This was the birth of the petrodollar system, the secret deal between the U.S. and Saudi Arabia. 1. The oil crisis of the 1970s, the perfect opportunity. In 1973, the world was hit by a major oil crisis. Middle Eastern countries, led by Saudi Arabia, were angry at the West for supporting Israel in a war. In response, OPEC, the Organization of Petroleum Exporting Countries, cut oil production and stopped selling oil to the U.S. and Europe. Oil prices quadrupled overnight, sending shockwaves through the global economy. The U.S. economy was in serious trouble. Gas prices skyrocketed, inflation soared, and economic growth slowed. The country was desperate for a solution. This is when the U.S. government saw a way to turn the crisis into an opportunity. 2. The Nixon-Kissinger Plan, a game-changing agreement. In 1974, U.S. officials, led by Henry Kissinger, flew to Saudi Arabia with a bold proposal. The U.S. would provide military protection to Saudi Arabia, ensuring the safety of the ruling royal family. In exchange, Saudi Arabia would agree to sell its oil exclusively in U.S. dollars. That meant any country that wanted to buy Saudi oil had to first get U.S. dollars. And here's the real kicker. Soon after, the rest of OPEC joined the deal. Now, all major oil-exporting nations agreed to sell oil only in dollars. The petrodollar system was born. How the global oil trade locked the world into using dollars. This deal was a masterstroke. Even though the dollar was no longer backed by gold, it was now backed by something even more valuable: oil. Here's why this was so powerful. 1. Every country needed U.S. dollars to buy oil. Oil is the lifeblood of every economy. No country can function without it. Europe needed oil. Japan needed oil. China, India, Africa, everyone needed oil. And since oil was only sold in U.S. dollars, every country had no choice but to get dollars first. This meant nations had to trade with the U.S. or borrow from U.S. banks to get dollars. Countries started holding massive dollar reserves in their central banks. The demand for U.S. dollars exploded. The U.S. had created a system where the world had to use dollars, whether they liked it or not. 2. The U.S. got an unfair advantage. This system gave America an unbelievable financial advantage. Since the U.S. could print dollars anytime, it could buy oil without worrying about exchange rates. The U.S. could run massive debts because other countries had to keep lending money in dollars. The Federal Reserve could control global finance by adjusting dollar supply and interest rates. In short, the petrodollar system allowed the U.S. to live beyond its means. It could keep printing money, borrowing, and spending without suffering the same financial consequences as other countries. The petrodollar recycling, how the U.S. made even more money. The petrodollar system didn't just force countries to use dollars, it also forced them to invest in the U.S. Here's how it worked. Oil exporting countries made huge profits by selling oil in dollars. Since they had so many dollars, they needed to do something with them. The U.S. encouraged them to reinvest those dollars in American assets, like U.S. Treasury bonds, stocks, and real estate. This meant that oil money flowed right back into the U.S. economy. The U.S. was getting rich without actually producing anything. It was just recycling dollars. The long-term impact. Why the petrodollar still rules the world. For decades, the petrodollar system has been the backbone of U.S. economic dominance. It keeps global demand for dollars high. It allows the U.S. to borrow and spend without limits. It gives the U.S. huge power over the global financial system. But here's the big question. How long can this system last? Lesson 7. U.S. military and economic influence, the silent force behind the dollar. The U.S. dollar isn't just the world's most powerful currency because of trade deals or financial policies. It's backed by something far stronger: military power and economic influence. For decades, the U.S. military and Wall Street have worked together to ensure the dollar remains the backbone of global finance. This isn't a conspiracy. It's just how power works. When countries or financial institutions consider moving away from the dollar, they have to think twice, because the consequences can be severe. So, how does this all work? Let's break it down. How U.S. military power ensures global trust in the dollar. The U.S. has the most powerful military on the planet. The largest defense budget, more than the next 10 countries combined. Hundreds of military bases spread across the world. Control over key global trade routes, including oil-rich regions. This isn't just about defense, it's about influence. 1. The U.S. military protects the petrodollar system. We already talked about how the petrodollar system forces countries to use U.S. dollars. But there's another side to this: military protection. Saudi Arabia and Gulf countries rely on the U.S. military to protect their oil fields and maintain stability in the Middle East. In return, they continue selling oil only in U.S. dollars. Any country that tries to challenge this system faces serious consequences. Just look at history. Iraq, 2000. Saddam Hussein tried to sell oil in euros instead of dollars. The U.S. invaded in 2003. Libya, 2011. Muammar Gaddafi planned a gold-backed African currency to replace the dollar for oil trade. The U.S. and NATO intervened, and he was removed from power. These events show that military action isn't just about security, it's also about protecting dollar dominance. 2. U.S. military bases and global stability. The dollar is considered the safest currency because the U.S. ensures global stability, or at least the stability that benefits its interests. The U.S. Navy protects major global trade routes like the South China Sea, the Persian Gulf, and the Strait of Hormuz. This means global trade flows smoothly, and countries trust the U.S. dollar as the international currency. Without this military presence, global markets would be much more unstable, and the demand for the dollar would weaken. The role of Wall Street and financial institutions in dollar dominance. It's not just the military that keeps the dollar powerful. Wall Street and financial institutions play a major role too. 1. The U.S. controls global finance. The world's biggest financial institutions are based in the U.S. Think about it. The Federal Reserve controls U.S. monetary policy, which directly affects global markets. The World Bank and IMF, International Monetary Fund, are heavily influenced by U.S. interests. SWIFT system, global banking network. Most global transactions are processed through a system the U.S. can control. This means the U.S. has the power to cut off countries from the financial system if they don't play by its rules. Example, sanctions on Russia. When Russia invaded Ukraine, the U.S. and its allies froze Russian assets and cut it off from SWIFT. Example, sanctions on Iran. The U.S. used financial sanctions to block Iran from global trade, making it harder for the country to sell its oil. This is called economic warfare. If a country challenges the U.S. dollar, it can be locked out of the global financial system. 2. The U.S. stock market and treasury bonds. Every country needs U.S. dollars, not just for oil, but also for investments. Central banks worldwide hold trillions of dollars in U.S. treasury bonds. The U.S. stock market is the biggest and most stable in the world, attracting massive foreign investments. Even countries that don't fully trust the U.S. still have to invest in its economy because there's no better alternative, at least not yet. One thing's for sure, as long as the U.S. has both the world's strongest military and financial system, the dollar will remain king. 8. The dollar crisis, inflation, debt, and financial crashes. The U.S. dollar may be the most powerful currency in the world, but that doesn't mean it's invincible. Over the years, it has faced some serious financial crises, from market crashes to massive inflation and skyrocketing debt. So, what causes these crises? And how does the U.S. keep the dollar from collapsing? The answer lies in a system controlled by one of the most powerful institutions in the world, the Federal Reserve. Let's break it all down. Major financial crises and their impact on the dollar. The U.S. dollar has gone through multiple financial disasters. Some of them nearly destroyed the global economy. Here are the biggest ones. 1. The Great Depression, 1929 to 1939, the first major collapse. In 1929, the stock market crashed overnight, wiping out fortunes and triggering a worldwide depression. Banks failed. People rushed to withdraw their money, but banks didn't have enough cash. Unemployment soared. Companies collapsed, and millions lost their jobs. The dollar struggled. The U.S. had to abandon the gold standard in 1933 to print more money and revive the economy. This event showed a harsh truth. When the economy collapses, even the dollar isn't safe. 2. The 1970s inflation crisis, when the dollar lost its backing. In 1971, President Nixon removed the dollar from the gold standard. This meant the U.S. could print money without any gold backing. What happened next? Massive inflation. Prices skyrocketed. The U.S. economy struggled with high unemployment and recession. The dollar lost value. People needed more dollars to buy the same things. This crisis forced the U.S. to create the Petrodollar system in the 1970s to keep the dollar dominant in global trade. 3. The 2008 financial crisis, when the banking system almost collapsed. This was one of the biggest crashes in history. The entire US banking system nearly collapsed because of bad loans and risky financial practices. Banks failed. Major financial institutions like Lehman Brothers went bankrupt. Millions lost their homes. Foreclosures hit record highs. The government had to bail out banks. The Federal Reserve printed trillions to stop the collapse. This event exposed a big problem. The US economy is built on massive debt. 4. The 2020 pandemic crash, a new economic shock. In 2020, the world shut down overnight due to COVID-19. Businesses closed, unemployment hit record highs, and markets crashed in days. To keep the economy alive, the Federal Reserve printed over $6 trillion. This led to inflation hitting a 40-year high, a massive rise in national debt, people losing trust in the dollar's long-term stability. These crises prove one thing: the dollar's power isn't unshakable. Every time there's a financial disaster, the US has to take extreme measures to keep it stable. How the Federal Reserve controls the dollar's value. The Federal Reserve, or the Fed, is the most powerful financial institution in the US. It's not just a regular bank, it controls the entire US economy and influences global finance. How does it do this? 1. Printing money, quantitative easing. Whenever the economy struggles, the Fed creates more dollars out of thin air. More dollars, people have more money to spend. But too much money equals inflation skyrockets. This is why prices rise, because the more money there is, the less valuable each dollar becomes. 2. Controlling interest rates. The Fed can raise or lower interest rates to control inflation. Lower rates, more borrowing and spending. This helps boost the economy but can cause inflation. Higher rates equal slower borrowing and spending. This fights inflation but can trigger a recession. This is a constant balancing act. If the Fed makes the wrong move, it can crash the economy or create hyperinflation. 3. Managing national debt. The US owes over $30 trillion in national debt. Every year, it borrows more money to keep running. This means the US must keep printing dollars to pay its debts. If debt gets too high, trust in the dollar could collapse. So far, countries still trust the dollar because they don't have a better option. But if that trust fades, the entire global financial system could change. Why major economies like China and India still use the dollar? Now let's talk about China and India, two of the fastest growing economies. Both have strong currencies, yet they still use dollars for global trade. Why? 1. Stability and predictability. Even though China and India are economic giants, their currencies aren't as stable as the US dollar. The Chinese yuan is tightly controlled by the government, making it less predictable. The Indian rupee fluctuates too much to be a reliable global currency. Most countries prefer the stability of the US dollar over the risk of using a currency that could change value overnight. 2. Global contracts and trade agreements. Most international trade contracts are written in dollars. If an Indian company buys oil from Saudi Arabia, they pay in dollars. If a Chinese manufacturer sells products to Europe, they receive dollars. Even if they convert the money later, dollars remain the middleman in trade. 3. The power of U.S. banks and financial systems. The global financial system is built around the U.S. dollar. International transactions go through U.S. banks. The biggest financial hubs, like New York and London, trade in dollars. SWIFT, the global banking network, primarily operates in U.S. dollars. Even if China and India want to move away from the dollar, they're stuck in a system that's been built around it for decades. Will countries ever stop using the dollar? China, Russia, and even the BRICS nations are trying to reduce their dependence on the dollar. But can they really replace it? Yes, if another stable alternative emerges. Yes, if countries agree to trade in their own currencies. Yes, if trust in the US dollar weakens due to debt or inflation. But for now, the world still runs on dollars. Until a new system is strong enough to replace it, global trade will continue to depend on the same currency that has dominated for over 80 years. China's push for the yuan as a global currency. The rise of the Chinese economy. China is the world's second largest economy, and in some areas, it has already surpassed the US. It's the largest trading partner for dozens of countries, including major economies in Asia, Africa, and Europe. With so much economic power, China doesn't want to rely on the US dollar. It wants its own currency, the Chinese yuan, also called the renminbi, to be the global standard. Hacker 2. The digital yuan, China's secret weapon? To boost the yuan's global use, China has launched the digital yuan, a government-controlled digital currency. Unlike Bitcoin or other cryptocurrencies, it's fully backed by China's central bank. It allows for faster, more controlled international transactions. It gives China more economic influence over countries that use it. China has already started using the digital yuan in cross-border trade. If successful, it could be a game changer in reducing reliance on the dollar. 3. China's trade agreements. Cutting the dollar out. China has made bilateral trade deals with Russia, Brazil, and other countries, agreeing to trade in local currencies instead of US dollars. For example, China and Russia now conduct most of their trade in yuan and rubles. China and Brazil have a deal to trade in yuan and reais. The Belt and Road Initiative, China's massive global infrastructure project, promotes the use of the yuan. This means fewer countries are using the US dollar for trade, weakening its global influence. The BRICS nations attempt to reduce dollar dependency. China isn't alone. The BRICS nations, Brazil, Russia, India, China, and South Africa, are working together to challenge the dollar's dominance. 1. The BRICS currency plan, a dollar alternative. The BRICS countries have discussed creating a new global currency to compete with the US dollar. The idea is to create a BRICS-backed financial system where member nations can trade without needing dollars. This currency could be backed by a basket of BRICS currencies: yuan, rupee, ruble, real, rand, gold, and other commodities to give it stability, a digital platform for cross-border transactions. If successful, this could shift global trade away from the dollar. 2. Russia's role: sanctions and the push for de-dollarization. After Russia faced heavy US and European sanctions, it had no choice but to reduce its dependence on the dollar. Russia started trading oil in yuan instead of dollars. It made deals with China and India to trade in rubles and rupees. It is working with BRICS to develop an alternative to the SWIFT banking system. These moves speed up the global shift away from the dollar. 3. India and Brazil, quietly reducing dollar use. While China and Russia are leading the charge, India and Brazil are also making small but steady moves to reduce dollar dependency. India has started using rupees for some international trade deals. Brazil is trading more in Chinese yuan and considering alternatives to the dollar. Even if these steps are small, they add up over time. 11. The rise of digital currencies, a threat to the dollar? For decades, the US dollar has dominated global finance. But today, a new challenger is emerging: digital currencies. From Bitcoin to stablecoins to central bank digital currencies, CBDCs, the financial system is evolving fast. These digital assets are faster, borderless, decentralized, and beyond government control. So, could they replace the dollar and become the new standard for global trade? Or is the US dollar still too powerful to be challenged? Let's break it down. How Bitcoin, stablecoins, and digital payment systems challenge the dollar. 1. Bitcoin, the digital gold that bypasses banks. Bitcoin was created in 2009 as a decentralized currency, a form of money that isn't controlled by any government. It was designed to be limited in supply. Only 21 million will ever exist. Borderless and independent, no country controls it. A store of value, like digital gold. Over time, Bitcoin has become a global asset. Some countries, like El Salvador, have even made it legal tender. But the biggest challenge to the dollar comes from its use in international transactions. Businesses and individuals can send millions in Bitcoin across borders in minutes, without using US banks or SWIFT. Countries under US sanctions, like Russia and Iran, are exploring Bitcoin to bypass the dollar-based financial system. Bitcoin is still volatile, but its very existence threatens the traditional power of the dollar. 2. Stablecoins, the dollar's digital rival. Bitcoin is too volatile for most businesses to use in daily trade. That's where stablecoins come in. Stablecoins are digital currencies pegged to real-world assets, like the dollar or gold. They combine the speed and efficiency of crypto with the stability of traditional money. Popular stablecoins like USDT Tether and USDC, USD Coin, are backed by the US dollar. DAI is backed by a mix of crypto assets. Some stablecoins are pegged to other currencies like the euro and yuan. Why does this matter? Because stablecoins allow people to bypass the traditional banking system. Businesses and traders can move money globally without using US banks. Developing nations with weak currencies, like Argentina or Nigeria, are using stablecoins to protect their wealth. Some governments fear stablecoins could weaken their national currencies. If stablecoins become more widely accepted, they could slowly chip away at the dollar's dominance. 3. Central bank digital currency CBDCs. Governments fight back. The rise of Bitcoin and stablecoins has forced governments to act. Many countries, including China, the US, and the European Union, are working on their own central bank digital currencies, CBDCs. A CBDC is a government-backed digital currency that operates like cash, but exists only in digital form. China has already launched its digital yuan, which is being tested in cities across the country. The US Federal Reserve is researching a digital dollar, and Europe is working on a digital euro. If these digital currencies go mainstream, they could make international transactions faster and cheaper, reduce reliance on traditional banks, challenge Bitcoin and stablecoins by offering a safe digital alternative. But there's a catch. CBDCs would still be controlled by governments. They wouldn't give people the financial freedom that Bitcoin or decentralized stablecoins do. So, could a digital currency truly replace the dollar? Not yet. The US dollar is still the world's most trusted currency. The global banking system is built around the dollar. Governments and central banks still control most financial systems. But the cracks are forming. As more businesses, individuals, and even nations start using Bitcoin, stablecoins, and digital currencies, the dollar's dominance will slowly weaken. The real question is not if digital currencies will challenge the dollar, but how long it will take. What do you think? Will the dollar remain the world's most powerful currency, or will a new contender take its place? Drop your thoughts in the comments below. If you found this video valuable, don't forget to like, share, and subscribe for more deep financial insights. Hit the bell icon so you never miss an update. See you in the next video.